In this video, we will hear from economist, American lawyer, investment banker, speaker, and best-selling author, Jim Rickards. Rick rules a highly experienced investor within the natural resource industry's investment marketplace. He has worked with hundreds of international operations and is a highly sought-after investment speaker.
I think gold goes not merely higher, but substantially higher. I think most investors' timeframes are fictional. Our response to gold has been shaped by 40 years of benign economic climate, with lower real interest rates, negative real interest rates, frankly, and moderated inflation. I suggest that 40 years is over. Gold does well when people, as we've discussed before, are concerned about the maintenance of their purchasing power and other savings and investment assets. And people should be very concerned. Against most currencies, gold is already in record territory. I think that if your listeners believe that we will return to real interest rates, which is to say that inflation will subside below the rate paid on the U.S. 10-year Treasury, that they don't need to own gold. I suspect that if your listeners believe what Justin Trudeau said, which is the budget will balance itself, that they don't need to own gold. I suggest that if your listeners believe that $32 trillion in on-balance sheet liabilities and $100 trillion in off-balance sheet liabilities being serviced by a budget in deficit as to $2 trillion a year is something that they don't need to be concerned about, they shouldn't own gold. I don't share a lack of concern about any of that. I think inflation is a problem. I think negative real interest rates, particularly as a saver, is a problem. I think the debt is a problem. I think the deficit is obscene. The consequence of that is that I own physical gold, a fair amount of it. I would prefer to look back at today, 10 years from now, and say all of that insurance, all of the gold I bought was for naught. Everything had a happy ending. Congress balanced the budget. Inflation came down of its own volition. The debt somehow magically got paid off. I don't believe in magic. So I own physical gold.
The interesting thing about gold, I recommended it at $1,100 an ounce, US, $1,200 an ounce, $1,300 an ounce, $1,400 an ounce, $1,500 an ounce. And they say, Jim, I listened to you carefully. I agree with everything you said. I see this disaster coming. Please call me like 3 o'clock the day before and I'll sell my stocks and go buy some gold. And I have a two-part answer to that. One is I'm not going to know the day. I can tell you how bad it's going to be. But my real answer is, what are you waiting for? If you agree that this kind of collapse is coming, why wouldn't you buy your gold now? First of all, at a more attractive price. Secondly, when you can get it. And the other warning I gave was that when you really, really want your gold, when you want it the most, you won't be able to get it.
Gold's track record is clear, and so is the US dollars. Fiat currencies have come and gone, but all the while, gold and precious metals have stood the test of time. Get started protecting your retirement savings today. See the links in the video description to get access to the free gold investment guides from the Best Gold IRA and gold investment companies that we have personally researched and vetted. You have nothing to lose, but you have wealth to keep. Thank you for watching.